My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. You know, most people when they get into real estate investing discover property management the hard way. They buy a rental property, they buy a building, and now all of a sudden they are a landlord and they get to deal with tenants, toilets, termites, all that kind of fun stuff. Well, today's guest did it the other way around. He spent years working as a property manager and then got into investing, then got into syndicating, then got into multifamily. So Mo Hashem is zooming in from Houston, Texas. Mo, welcome to the show. Great to have you.
Hey, thanks, Dave. Appreciate you having me on.
So just to give people a big picture overview of what you do in real estate as of 2025, maybe just kind of zoom out, give us the 30,000 foot perspective.
Yeah, absolutely. I think you hit the nail on the head there in terms of all I do, but we provide third-party property management for individual landlords. You own a single-family home and you did not sign up to be a handyman. You would hire us to really be the face of your home and manage that property for you long-term. And we are in a few different markets there. And then, as you mentioned, we also invest as well. So if you want the pure, complete hands-off approach and you want to just invest passively, we have a private equity firm where we go out and find the bigger multifamily deals or built-to-rent communities, and we will manage it, and you can just invest passively into that deal as a limited partner and be part of the project that way.
Okay, cool. So let's take a look at the property management side of things. What markets do you serve, first of all?
Yeah, great question. So we are in Northern Virginia, Washington, D.C., Maryland, and then the Texas Triangle. So we're in Houston, Dallas, Fort Worth, Austin, and San Antonio.
Okay, those are far apart. How do you have like branch offices in each location, or how do you do that, Mo?
Yeah, we do. So, I do get asked that quite often. So I'm originally from the DC area, and so that's why we are there. Started the business there, and we were there for about 5-6 years because of the growth that we saw there and the success. We wanted to take it to the next level. And somebody once said, everything's bigger in Texas. So I figured we go there and make it bigger there, right? So, but all joking aside, Texas is one of those markets that a lot of landlords should be looking into because of how landlord friendly it is. And that actually played a big part in why we chose Texas to branch off into. So yeah, we can go into that more in depth, but that's how we ended up here today.
So did you start off managing more single family home type properties, small multis, or did you kind of start off in the larger apartment buildings?
So all single family homes. I, like probably a lot of people that are just getting into real estate investing, think that you have to buy one single family home to get started and kind of go that route. And I'm not one to really follow the whole no money down thing. I always felt like real estate involves some money. And so in my research and doing things, I always thought, hey, let me buy a couple of rent houses for myself and, enough to kind of cover my day-to-day expenses, and that's it. But ultimately, I realized I needed money to buy those rent houses. So I figured, hey, why don't I just start managing homes for people and knock out two birds with one stone, get paid to do that, and also learn how to do it, and then ultimately use that money to invest in my own single family homes.
Okay, cool. So today, do you still only manage single family homes, or have you branched into multifamily as well?
We are in a multifamily as well now. We typically manage the properties that we own on the multifamily side. And on the single family side, we do work with individual investors and help them along the way. Okay. I feel like those are the ones that need the help more.
Well, they do. And there's very, very few professional management companies that will even pay any attention to a landlord who owns a single family home. It's just not enough juice for the squeeze in their opinion. So And one of the reasons is it's just such a pain in the butt having to go to so many different locations to deal with single tenants. So how do you guys do this at scale efficiently?
Well, I think you said the key word there is scale. If we only had one or two properties in each one of these markets, it really wouldn't make sense. And so, as a investor yourself, if you do only have one or two properties, it is really difficult to be a pure real estate investor until you have scale because you're doing a lot of the work yourself. And I always say you're basically creating a second job for yourself, right? But with us, we've been in business for, man, we're on like year 14 now.
Nice.
And so we've got well over 600 properties that we manage throughout all those different markets. And so each one of those markets does have enough scale where we do have enough to have boots on the ground. And it does make sense from us from an economies of scale to be able to manage them effectively. Whereas somebody that doesn't have that kind of economies of scale, it wouldn't.
Yeah. Okay. So for people that do own single family homes, if they're outside of your market and they're looking for a property manager, what's kind of the going rate these days for how much is charged for single family home management?
Great question. It varies. We were one of the early adopters of the flat fee model for us. So, you can get started with us on ours anywhere as low as $99 a month, flat fee. There are companies that still charge flat fees above that, anywhere from like 99 to 200, depending on, what they got going on. And then you have your traditional companies that charge a percentage companies. I've seen anywhere from very limited service starting at 4%, going up to, I would say most likely closer to 8%, 10% is
Mhm.
what you're typically seeing traditionally on the percentage side.
Yeah, I guess it really depends on how many houses you have and how much they're going to be, how many of them are going to be under management, all that kind of good stuff. Okay, cool. So that's the property management side. Now, for folks that you've learned a lot, you've managed thousands of properties, thousands of tenants over the years. Do you have any quick tips for do-it-yourselfer kind of property managers to make their life a little bit easier based on your experience?
Yes, I do. And I think you always got to start with your why before you really even go the DIY route. I think a lot of people that I speak to, they say they get in real estate investing and their why is to buy back their time, spend time with family, have passive income. And you're
Yeah,
laughing. I can see
yeah,
you laughing there when I say that stuff. And it almost turns into the opposite of that when they start that because they are literally doing everything. I mean, and I think part of it is it's glorified on social media and some of these shows you watch on TV where like these investors are swinging the hammer and doing all this stuff. And my biggest thing would be real estate's a team sport. And if you treat it like a team sport and you leverage, and real estate's all about leverage, not only about the loan, but also people. And so
mhm,
I would just suggest leveraging skills that other people have that are better than yours, whether it is an actual handyman or a property manager or whatever it may be. Um, don't be cheap on it because at the end of the day, you got to realize like every dollar you're saving, you're spending in time, and you need to realize what the trade-off is there and if it really makes sense.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Yeah. Yeah. Good points. All right. Now let's switch gears to the investing side of things. So when did you kind of come to the conclusion that you wanted to be more actively involved as an active real estate investor?
Yeah, so after a few years of doing the property management company, I got to a point where I need to figure out what to do with my money at that point. I could have kept on reinvesting it in the company, and we still do. But there, again, like many things, there becomes a point where like it just you don't get the same return anymore. And
Mhm.
so for me, I saw real estate as always a great way to preserve my wealth. And so that's when I started looking into doing things bigger. I'm all about, like I said, economies of scale. And I think when real estate investing, that is the holy grail, is getting that economies of scale. And so that's why I landed on multifamily specifically, because that is the ultimate team sport. You're working with other general partners, LPs, property management company. Like it's a team that really puts a multifamily deal together. And I also like how multifamily is valued. It's valued differently than residential. And so it's more of a business type of transaction that you're doing. And that's what I like more. I'm not really so much into the emotional side of the residential. I'm more on the numbers stuff. And if I can affect the value of a property by my execution, I'm going to go that route versus not being able to do so.
So what does the portfolio look like these days for you, Mo?
Yeah, it's split about 50-50. So we have about 50% of our portfolio is in the multifamily and the other 50% is single family homes.
Okay. And when you're doing the multifamily properties, you said it's a team sport. What role do you play are you one of a number of co-GPs in a deal? And if so, what's typically your role?
Yeah, so in the ones that I am in, I am the managing general partner. So we do have several GPs that typically come on, and we all have a role, which we assign clearly before we even get started. But we also realize like one person is typically in charge of what's going on, holding the meetings, giving updates to investors and so forth, making critical decisions, bringing decisions to the group. And so that's my role. I am the one that typically drives the ship in these situations and gives updates. And I just try to make life easier for all my partners and my LPs. And so that's my role throughout most of that.
Okay, that makes sense. And how many multifamily properties are you involved in right now? And
Uh,
what areas?
yeah, so we're in Houston. We have two larger multifamilies. So we have a 260 unit multifamily complex that we manage. And then we also have a 128 unit.
Okay, very nice. And moving ahead, what are the, things in the multifamily space have been a little shaky over the last couple of years. How, if at all, has that affected you guys, and how's that affected what your plans are moving into the future?
Yeah, for sure. It has affected it a lot. I'm going to be honest with you. I'm not as bullish as I was a few years ago on it. And it's not necessarily just because of what's going on with interest rates and so forth. I think with the rise of technology in general, AI and what's going on, and how that's going to potentially affect the overall job market in a few years,
Mm.
uh, is going to have effect on how people pay their rent because of the money that comes in. And, a lot of the apartments that we have been focusing on were primarily workforce housing type deals. And so we have to just look at the overall economy and what we think it's going to be in the next 5 years. So at the end of the day, everybody needs a place to live. That's what they always say. And so housing is going to be there. It's just got to get to a point where the numbers make sense. And right now it just really hasn't. And so we have been putting a little bit more effort into our property management side, providing support for those who do have properties right now. And I actually have kind of flipped a little bit. I do want to get into more of the single family acquisitions, but again, more on scale. And so that would be more like the build to rent or
Mm.
build for rent communities and affecting it that way.
Okay, very, very cool. Awesome, Mo. Well, this has been very, very interesting. Thanks for sharing your experience on both sides of the table as the property management guy and as the investor. And if people want to connect with you and find out more about what you're up to, what's a good way for them to do that?
Yeah, I can be reached on LinkedIn is probably the primary one. It's Mo A Hashem. I also have Instagram, same handle, Mo A Hashem. And I'm very responsive and look forward to reaching, communicating and adding value to anybody that reaches out.
Awesome. Well, thanks for being on the show, and everybody, thanks for tuning in. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.